For more on what we do next, John Tamny, Director of the Center for Economic Freedom at Freedom Works. He's also the editor of Real Clear Markets. Welcome back to the show. John, good to see you.
Yes.
What do we do? Where do we go from here? We've got Credit Suisse, we've got questions. We have SVB, who one of the second biggest bank failure in the U.S., and I know there are a lot of reasons why it happened, and everyone's pointing fingers, but the bottom line for the general public is really a lack of confidence. You see that in the market, you see that in the action of stocks, and now this is bleeding over to Europe. My question to you is, should we panic? Are you panicked? Do we need to worry about this, or can it be contained?
No, the only reason to panic is if businesses never fail. Why is Silicon Valley the richest, most dynamic locale in the world? It is not because all the businesses succeed. It's the richest because most of them fail. And because that, you're constantly shifting crucial resources to better uses and to better management. Why would we expect banking to be different? And so the danger here, and the danger for the U.S. banking system, notice how U.S. banks started to correct more once it became apparent that the FDIC was going to come in and make depositors at SVB whole. What that signals is that there's going to be an ongoing nationalization of the U.S. banking sector. That's not going to improve it. It's going to weaken it.
But hang on. Throughout history, most depositors, in fact, all depositors I know, and I mean bank depositors, not investors, have been made whole in almost every single bank failure that in recent memory. So are you talking about the depositors that you would argue should or should not be made whole, or are you talking about investors or counterparty risk through other banks? Because having gone through 2008, it is extremely convoluted and interconnected, and the FDIC and the federal government have a very, very big role. Are you saying they did the wrong thing?
Yes, of course they did the wrong thing. What if Bear Stearns was allowed to fail? Probably Lehman goes the next week, and then we move on. It was the intervention, the saving of what market actors did not want to save, that caused a crisis. It's never a crisis for businesses to fail. That's a sign of progress. The U.S. is defined by endless replacement of the bad and mediocre by the good and great. And so when you restrain that through government intervention, is it any surprise that a crisis ensues? And so you look at this. If the FDIC stays out of the way, someone was going to come in and buy SVB, probably on the cheap, and in buying it on the cheap, they're going to be able to make the depositors largely whole in the first place. That's what you want to have happen. You want, when something is disliked by the markets, for it to change hands. In this case, what we do is we bail out banks, and so we cushion their mistakes. And in so doing, government doesn't bail you out and say, okay, we're going to step away. It just means that the banking sector is going to be even more regulated, hence less dynamic, hence less important to the U.S. economy. This isn't good for banking.
But John, you know, the flip side of that argument is that isn't that what they kind of did, right? Over the weekend, they put it up for auction, the assets of the bank. They were looking for buyers. In fact, as of right now, I'm still reading there might be potential buyers interested in certain assets of the bank. You want an organized collapse or closure of the bank. You don't want to have a crisis and have the whole thing blow up. Isn't that the role of the federal government or any government for that matter?
No, I don't think so. I don't see what's different about banks that they can't be allowed to abide the same market forces that any other business does. And I certainly don't think it's helping the banking system. With each passing day, its relevance to the U.S. economy declines. Its relevance to credit, to asset allocation declines. And why is that? Well, when you're owned by government, when government continues to be there for you when you fail, you're limited in terms of what you can do. By most accounts, the Fed has bailed out Citigroup 5 times in the last 25 years. Has that improved its outlook? No, I would say it's weakened it. And I don't see the difference here. If they don't do anything, there was going to be a buyer. And for all those businesses that couldn't make payroll, something tells me that other financial institutions, seeing an opportunity, were going to come in and help them make payroll in the near term, because there's money to be made for doing so. More broadly, to say that other banks weren't going to buy the 16th largest franchise on the cheap, I think, beggars belief, and it vandalizes common sense. Of course there's going to be a buyer.
Let's take a real story right now. We're at Credit Suisse, right? I mean, we're pro, I guess, banks doing their own thing, they're private institutions, so is Credit Suisse. But yet, now there's talk that the federal government over in Switzerland may have to provide liquidity or support to the bank. I mean, isn't there a role, and I don't want to use the word backstop, but perhaps a soft safety net or support for these institutions that very much we would all argue are very important to whether it's America or Europe or any country, whichever country these banks are from. You want to support these national institutions to be successful private entities, don't you?
Well, but they're not private entities if governments are stepping in and saving them. So no, it's precisely because I love the financial sector and I love the banking sector that I don't want government stepping in and saving what market actors wouldn't otherwise save. But you see, what that deters is the prices of these businesses reaching their natural level, including zero, which would presumably attract a lot of buyers. Credit Suisse is full of talented financial types. So obviously is Silicon Valley Bank. And so if it falls to a low enough level, someone's going to come in and say, hey, wait a second, I've got the chance to buy the most important bank and the most dynamic, richest part of the global economy, Silicon Valley. I think there would have been buyers. But when you set it up every time that, oh, we know government's going to come in, who is going to come in right away and buy it? Of course, they're going to wait for government to basically do the dirty work for them, bail them out, then they'll come in after the fact. I don't want that.
John, always appreciate your analysis on this. I have a feeling that we will be perhaps talking to you again very shortly, depending on what happens over the next 24 hours. Appreciate it. Thank you.
Thanks for having me on, Phil.